Good evening and welcome to a brand new show of Markets Tomorrow. The name of the game today was Fluctuating Fortunes. We started flat, regained some traction on the Nifty, came crashing down, and then finally, what a majestic recovery in the last 60 minutes of trade. Nifty closed at the highest point of the day. So do we have a trading bottom in place, or today's volatility is just a flash in the pan and today's price action is no measure of what lies ahead? So how should one trade into this market and which are some of the key stocks where you should put your money to work? All that and much more on this edition of Markets Tomorrow. My panel for the day includes Mrinal Singh, Fund Manager with ICICI Prudential AMC, Sandeep Wagle, Founder and Managing Director of Apta Technical Advisory, and to give us a better understanding of both macros and micros, Sudeep Bandyopadhyay, President of Destimony Securities. Before I start the panel discussion, here's a look at how things moved for Indian markets for the day gone by. Like I mentioned, it was a classic V. It doesn't get better than that. When you crack and then you recover. Nifty on intraday basis did crack below 6,000. FMCG and consumer stocks, so flavor of defensives and a flavor of high beta was at play. BSE Realty, now money clearly moved out of DLF, money moved out of Unitech, money also moved out of other smaller real estate stocks as well. Bank of Baroda, numbers in line with estimates. The good news here is that margins are no longer contracting and NPAs are coming down. Coal India, for some strange reason, was the biggest gainer on the Nifty today. Now, HUL and ITC today had a decent session. Both of them went up on rather decent volumes. From the mid-cap space, it was Jet all the way, 10% of a Jet on very strong volumes. Both the exchanges put together, Jet today clocked volumes of about 7 million shares, 8 million shares, that's big. And Patel Engineering, more like a small cap stock now, went up by 15% and clocked volumes of about 2 million shares. That's about 20 lakh shares, both the exchanges put together. Let's talk market technicals, fundamentals, and let's connect the dots with the global pictures. And let me kickstart the panel discussion with Sandeep Wagle. Sandeep, a classic V today.
Nikunj, could you repeat? I couldn't hear what you said.
No, Sandeep, I'm saying if I look at the Nifty intraday graph, it was a classic V.
Oh yes, from the lower levels it did bounce back. I am still not sure whether it is the classic V. Some volumes did come up in the last half an hour or so. Some more upside, probably yes, 40-50 points upside, yes, 6100 could be tested. But I still feel the overall trend is on the downside, though we are seeing some buying at lower levels. I don't want to read into it as anything beyond that. Maybe short term, as you rightly said, the bottom is formed, trading bottom in place, yes. But I don't see a convincing move beyond 6150 and then further to 6200, 6250. Not that kind of a momentum. I think 6100, the Nifty will struggle to get past. We may not break 5950 for some time. So 5950 and 6150, this 150-200 point range is where I see the Nifty move in, at least for the next 3 or 4 trading sessions.
Sudeep Bandyopadhyay, what is your sense? We may have stopped falling, but I guess it's too early to make a case that bulls can engineer a fresh rally.
Well, Nikunj, we have been maintaining that there was nothing to get extremely worried about the correction which we have seen over the last few trading sessions. We believe that the emerging market sell-off and emerging market problem was little overdone as far as India is concerned. India had no reason to correct so much, and we believe that markets will recover, and I think that's what is happening. I will maintain the same view that we don't expect a major upside from current levels, neither do we expect a major downside. Like a classical election, market, we will be range bound, we will be volatile, and we will, move in a news-driven manner. So, as far as we are concerned, we think 6,400 is the maximum the markets can go pre-election, and on the bottom, we think it should not fall below 5,850.
Mrinal, for any financial market, it is really the liquidity situation which really influences the script. So what are the kind of feelers you are getting from retail investors? Because Indian retail investor has been out of Indian equities for the longest time I can remember.
So increasingly we are seeing traction increasing from the retail side, and that's a good sign. We strongly believe that retail investors are underinvested in equity. particularly in a time frame like this. And we urge most of our distributors and asset allocators to increase that allocation.
Sandeep Pagal, it was a decent day both for HUL and ITC. Do you think somewhere there is merit in revisiting some of these over-owned but over-neglected FMCG stocks?
Well, I had a buy in a HUL and I still have a buy in HUL at this level. I feel that HUL will have or probably may have the strength to go to all the way to 620, 630. So at a current level of 587, 588 and down to 580 if you get a chance. I would talk of a very clear 10 to 12% trading upside. So I would be keen on playing for that. Now it may not happen that it may go in the next few days, it may take the next few weeks. But I think when the market remains sideways or subdued, when the Nifty remains subdued, I think these are the stocks which normally outperform, and that is what we can expect. And I think between the two, if you ask me, ITC and HUL, at this point in time I would go for HUL based on the pattern.
Sudeep, why are IT stocks suddenly underperforming? If I map what the IT index has done this week, the IT index has taken a knock of about 3.5%. Do you think IT stocks are going through a period of technical correction, or at the current juncture, given the recent run-up, the risk-reward ratio is no longer favorable?
Nikunj, our view was slightly different on the correction we have seen in the IT pack. We believe that most of the investors, particularly the FIIs, are sitting on significant profit on the IT stocks. And whenever there is a pressure on the FIIs to sell stocks, they will come and sell some IT stocks so that they are exiting with profit. So I think we did see that play out in the market over the last few trading sessions. But we strongly believe there is absolutely nothing to get worried about Indian IT companies. They are performing very well. Indian currency is under pressure. Global markets, particularly US and Europe, has been performing well. These are the markets, remember, where our IT companies, at least the leading ones, have significant market share. So overall, as far as the IT companies are concerned, there is nothing to worry. And we believe that every sharp correction in IT stocks, particularly the leading ones, is an opportunity to acquire and build your position.
Ronald, if I look at your last declared portfolio, you have a very decent exposure to mid-cap IT, Mindtree, Persistent. Any reason why you are gung-ho on mid-cap IT and you have decided to ignore large-cap IT?
See, the IT per se makes a lot of portfolio sense because the addressable market, as we see, is still growing. So they are going to show a meaningful growth. And we believe mid-cap IT in particular is better poised because the valuations are not very steep. So they can deliver returns in line with their earning growth, if not more. So we definitely like mid-cap IT. But that doesn't take away the fact that large cap IT is also not very steeply priced. It can be considered for earnings related growth.
Sandeep Pagal, jumping on Jet Airways, 10% up, 7 million shares. It's rare, but Jet Airways has today made a very roaring comeback.
Yes, after such a beating that it has received, the stock has almost fallen from 380 levels to 210 levels over the last few months. I would still call this as a case of a strong bounce back from oversold zones, and this bounce back at 235 can extend to probably 255, 260. So as a trade, yes, but if you ask whether I would buy it for a 10, 15, 20% upside, not clear as of now. Probably no, the answer is no.
Sudeep, what is the importance of liquidity for a market? Because that really is the basic bedrock for markets. Minus FI flows, do you think this market will not go anywhere?
I agree with you, Nikunj. I think, as things stand today, at least till Indian elections, global liquidity is going to be the driving factors for Indian markets. On that, our thoughts are as follows. While US will continue their path of tapering slowly, there are enough and more liquidity being generated by other markets of the world also. Look at what's happening in Japan. When US had started the quantitative easing, Japan was not even thinking of liquidity easing. But today, while US is reducing liquidity, reducing quantitative easing, Japan is pumping money into the economy, and they are doing it pretty organized manner. Look at what ECB is doing. Today, incidentally, there is an ECB meeting, and probably end of the day we will know what's happening, how ECB is going to look at the policy as things stand today. But the liquidity in European markets also have been pretty good. So while US is reducing, the other major banks are infusing liquidity, and we feel that India is in a position to attract the residual liquidity which is available in the global markets, and which is going to be directed towards emerging markets. Very clearly, India is positioned much better than most other emerging markets to attract this liquidity.
Sandeep Wagle, today Tata Motors clocked decent volumes. Do you think we have a trading bottom in place for Tata Motors? Because in quick time, Tata Motors has corrected from levels of what, 430?
330 to currently 357. The momentum indicators are telling me that it can go up all the way to 370, 375. So some more trading upside, yes, but a change of trend, not very clear, Nikunj. I would want 390 to be crossed, that too with good volumes. Then I would talk of a 430 or so in the short term. Long term, I still have that view of 430. Probably you will have to wait for lower levels to buy, but I'm not certain whether it will come in one go at this point in time. But a 370, 375 looks likely.
Sandeep, since the month of Feb is a short one, the FNO series also will have relatively less number of days. So for someone who wants to maximize on the market volatility, give me an option strategy.
Nikunj, is this for me?
That's right, Sandeep.
Nikunj, my basic view on the markets is that the Nifty is likely to be choppy. You will not get a one-way move. Last 2 days have given a very clear indication you are getting long shadows. This suggests that you can have moves both sides. So there is no question of taking up, if you buy a call option, it doesn't make sense. I would rather look at a strangle nearer 6100 on the Nifty. I would look at playing the range of not crossing above 6200, 6250, not breaking 5900. That short strangle, I would take a call in the next 2 or 3 days. That will be clear. Nearer 6100, I would take that call, and you can eat the premiums since you have a shorter truncated month.
Well, Pharma had a okay day. Ranbaxy came down, Cadilla went up, Glenmark had a decent day, but Cipla took it on the chin, and Lupin also corrected marginally. Mrinal, what is your take on Pharma? Do you think Pharma is no more a defensive sector given what is happening in the given what is happening with US FDA?
So particularly in pharma we go very selective. We don't try to buy pharma as a space, we try to buy businesses because every business has its own characteristics. So the Indian part of the pharma business generally is tracking well. The long-term outlook is good. So we have to analyze their if they are in US or some other part of the world. So we have to analyze how they are positioned for the regulatory risk, what kind of product profiles they have. So in pharma we are very selective. That's the idea, and we try to have valuation by our side. We tend to take a long-term horizon, and we continue to be invested in the names that we are.
So what about metals, Mrinal? Because there is a divided opinion on metals. Those who believe that global growth is making a comeback, they are buying into metals. Those who are worried about China, they are clearly avoiding metal stocks like a plague.
Yeah, so if you look at the fundamentals of metals, China is by far the biggest consumer of base metals in the world, and by a major number, almost 50% in most of them. So how the Chinese economy invests, because for the last 10 years or so, Chinese have been investing heavily into their physical infra, which had kept the consumption rate and the prices high for metals. So let's see, I think the numbers that we are getting from China are trickling down. So we're not very bullish on metals anymore, frankly, unless some other part of the world or an economy can compensate for that lack of demand, which we think might come across from China.
Sudeep, what is your take on private banks? Do you think that is yesterday's story now?
Not really, Nikunj. Yeah, there are pressures, obviously, and it's apparent that the more you grow the loan book, the more pressure you have on your asset quality. And it's bound to happen with the kind of economic position India is going through. There is stress on the loan book, and every bank across the industry has that. Private sector has managed that risk pretty well, but still there is stress. So we will like to be very, very selective as far as private sector banks are concerned. We do like ICICI Bank quite a bit. Even at current valuation, we think it's an attractive buy. We are also bullish on IndusInd Bank. We also like Axis Bank. But by and large, other banks, we are extremely cautious.
What are some of the important stocks which should be on your radar for tomorrow morning? For that, let's go to Gargi.
Well, Nikunj, firstly, in HUL, we are hearing from dealers that a lot of buying that is expected in the next 2 to 3 trading sessions. Bullish technical trend is what we are hearing from the dealing rooms. In fact, what most analysts have said that above 585 levels, there has been some buying indicator that they see, and probably on the back of that, we will see some buying going there. 3% increase there, almost 70 rupees up, 17 rupees up move is what we saw on HUL. So it is a technical trend which is indicating a buy recommendation for this counter. The other one is M&M. Just ahead of the numbers, there is expected to be some buying on Friday as well as on Monday, just ahead of the results. Today we already saw a 2% move. In fact, a lot of option activity that we are expecting in M&M. In fact, what most dealers are saying that you can go ahead and buy some 800 rupee calls for M&M because going forward we will see a good number and there could be some follow-up buying on that front.
Argi, thanks a lot for that. Sandeep Bagle, what are your top ideas for tomorrow?
Nikunj, buy in a cane which has given a very clear breakout or is on the verge of giving a breakout. I would buy it with a stop loss of 328 and a target of 342. The second call is a buy in a Tata Communication. That stock has been showing good traction. I would buy it with a stop loss of 292, target 309.
Sudeep, at the current juncture, what are your classic long-term ideas? Where are you telling your clients that they should put money for long haul?
Nikunj, one large cap, one mid cap I'll talk about. I like Maruti quite a bit. For a minute, forget the corporate governance issue vis-a-vis the Gujarat plant and all that announcement. If you leave that aside for a minute, company has been performing excellently. The last quarter result was very good. Whatever they are going to do in Gujarat, the impact of that will be only felt after FY18. So we still have 4 financial years to go. And I think these 4 financials are going to be excellent for Maruti. So I would like investor to put money in Maruti right now and reap the benefit over the next 2-3 years. The second stock I will talk about in the financial services sector is LIC Housing Finance. Excellent company, great balance sheet, 97% retail book, excellent result, excellent loan book growth, and of course icing on the cake is banking license. If it comes, it's going to be a game changer.
Rinal, where is value in this market? Could you suggest some names, theme or ideas that appeal to you?
Well, I mean, if you look at our portfolio, which is public, you would get a sense where we think value is. Clearly, domestic cyclicals is something we think offer value. There is value, as we talked about, in mid-cap cement also. Particularly in mid and small cap, there are very interesting valuations around. across sectors. Those could be sectors which on the large cap side are steeply valued, but on the mid cap side they are still interesting. So for that value to unfold, the important thing is investors, we strongly should have a horizon, because when you get into mid and small cap, there is volatility of a higher order. And the way to deal with volatility is to have a longer horizon, and things when fall in place on the macro side, the value will be unfolded and returns would be consummate. This is what we've seen in the past also. This is what we believe should happen going ahead also.
Sandeep, what is your take on Coal India? It's been dog of a stock, but today it appreciated by about 4% plus. And just for the benefit of our viewers, at 267, Coal India also has that dividend in it, which is of 27 rupees.
Nikunj, actually you said it. I don't want to use the same words. I would say that this is a stock which many a times flatters to deceive. It goes to 275, 280, looks like it is about to give a breakout and then comes back, and it is disappointing for a trader or even for an investor. I would want to buy this stock only above 285, that too with good volumes. Now, at the way it has moved today, there are chances that it may break those levels of 280 to 285, and if that happens, this stock can go to 315, 320, probably even higher than that. So rather than taking a call now, I would wait for that decisive breakout of 280 levels in the weekly charts, wait for the weekly closing, and then take a call, and then ride all the way till 315, 320.